Hi, I'm James Dunn. Welcome to the Inside Network.
Welcome to INDepth, where my guest is Wenchang Ma, co-portfolio manager of the All China Equity Fund at 91. Welcome, Wenchang.
Thank you.
It's a great pleasure to have you here.
Pleasure.
Wenchang, the drivers of the Chinese domestic share market have changed a lot in recent years. Do you think that investors outside China really understand those changes within the A-share market?
I think not always. I think people often see that as a very big market and very liquid as well. But what people tend to ignore are the amount of bottom-up fundamental ideas that one can find, especially in the time where there are some macro headwinds that can muddy the picture overall. So we're in one of those periods, I think, right now. And when we look at the Chinese onshore market, we have seen that over the past 10 years, there has been an increasing number of very successful companies that came to that market to get listed. As a result, as fundamental investors, the opportunity set has enlarged quite significantly. And China benefits to have one of the most comprehensive supply chains globally. So that means that we can have a lot of leaders that are coming out from different industry verticals that we can potentially choose from. So if we are fundamental investors focusing on good quality businesses that are trading on reasonable valuation levels, and that they are also demonstrating improving operating momentum and improving technical momentum, then there is potential to generate very attractive long-term returns.
Is China, in your view, following a similar trajectory to other developing markets that have grown towards developed market status? Or is it a different, more homegrown, more unique growth story?
I think China has been following its own path, and there are some systematic differences between China and other countries, developed countries and also other emerging markets. China has achieved a very significant economic growth in the past 40 years. And also it has built the most comprehensive supply chain globally. It has achieved a very quick urbanization and also household wealth creation. A lot of that was due to the large population, but also the very hardworking, pragmatic entrepreneurs, as well as the consistent policy setting and long-term policy executions. And what we're witnessing now is China going through the transition, moving away from the property-driven economic growth and getting into more sustainable growth drivers such as consumption growth, the industrial upgrades and self-sufficiency as well, and also driven by the growth in the sectors that are enabling energy transition. So all those, I think, are sustainable drivers for the long-term growth. And although growth in the future is probably not going to be as fast as what they used to be, but it's probably also going to be higher quality growth for China as well.
Now, you are an investor that you're a fundamental-based investment firm and you like to invest from a bottom-up perspective, but do you also favour, from time to time, different industry sectors or economic thematics?
My team invests with a fundamental bottom-up approach following the investment framework, which we call four-factor, meaning that we're looking for companies with good quality that are trading on attractive level of valuation and are demonstrating improving operating and technical momentum as well. Our stock picking is using the fundamental approach with the help of a quantitative screen, which also helps us to improve the level of efficiency of our research. There are some themes that are very prominent in the portfolio, such as China's growing consumption market, China's technology improvement and increasing level of self-sufficiency in technology, and also energy transition, SOE reforms. So you can find all these themes that are present in our portfolio, but those are driven by bottom-up stock picking instead of top-down allocations.
Wenchang, the challenges of employing and feeding and housing and providing energy to 1.4 billion people are massive. Do you think the challenges that face the Chinese government are well appreciated outside China?
I think the equity market tends to anchor to the most recent challenges, and especially in the environment where market sentiment is weak, people also tend to ask more questions about the structural challenges that the country is facing. But that makes us forget about the opportunities that one can find within the second largest equity market in the world using a bottom-up stock picking approach, which we use as fundamental investors. I think we need to think about the supply chain that is abundant in China, the amount of opportunities that are coming from the industry leaders in the consumption industries, in the industrials, technology, materials industries, and among the abundant enablers of the global energy transition in the next decade or even decades to come. And the opportunity set is very, very rich for bottom-up stock pickers.
There is always inevitably an overhang of geopolitics in this space. Do you think that China still views its global trade relationships as being important?
I think China is not trying to decouple itself from the rest of the world. The export to the friendly countries has been increasing, although the export to the competitive economies is probably going to face more challenges. But globally, there has been a shift of the geographic allocation in terms of trade, especially following the COVID that we have experienced as well. But we look at the Chinese companies' positioning along different industry supply chains. They are in very good position to move up the value chain. And the amount of labor-intensive operations are probably going to move inland or into other emerging markets. But it doesn't necessarily mean that China's competitiveness in terms of its trade is fading. And China also has the significant domestic market to support these companies to be able to grow up in scale and maintain the level of competitiveness on the global stage.
Much of the rhetoric around China in Australia and the US is very focused on the end of the dream growth story, the end of the double-digit growth in economic terms. What do external investors most underappreciate about China?
I think China has managed the slowdown of growth from double-digit to high single-digit to mid-single-digit without any significant hard landings, and that in itself has been an achievement. And at the moment, China is still going through the transition. We are seeing in recent years China moving away from the more cyclical, property-driven economic growth model into the growth drivers that are more sustainable, notably the growing consumption in the economy, supported by an increasing number of middle income population, and also helped by technology innovation that are supporting the industry and technology sectors to move up the value chain and get to more self-sufficiency. And also it is by the energy transition that has already built a very strong supply chain inside China. And those companies, after they have achieved a significant scale, they're also contributing to the global initiative of decarbonization. So all those are very strong initiatives for growth. And that has created a lot of fundamental bottom-up stock picking opportunities on the Chinese market, which investors may tend to ignore when the overall economic situation is facing some temporary headwinds.
This has been In Depth with Wenchang Ma of the All China Equity Fund at 91. Thank you, Wenchang.
Thank you very much, James.